G'day and welcome. If you're keen to get into investing but you want a guide that's, completely jargon-free and just tells you how to get started here in Australia, well, you've come to the right place. We're going to break down exactly how you can start building your wealth. Let's dive right in.
First things first, let's talk about this number, 3.8%. Now, this isn't just some random stat. This is the current annual inflation rate. You can think of it as the silent enemy that's chipping away at your savings. So what does that actually mean for your wallet? Well, it's pretty simple. If the money that's just sitting in your bank account isn't growing faster than 3.8% each year, then what it can actually buy is shrinking. You're literally losing money just by letting it sit there.
And while your savings are kind of losing their power, the big goals in life are getting more and more expensive. Take a look at this number, $1 million. Right now, that's the average price for a house in Queensland. It just goes to show how huge the gap is between just saving your money and actually reaching those big financial goals.
Okay, so how do you fight back? How do you tackle inflation and start closing that gap? Well, for beginners, the most recommended starting point, by far, is something called an ETF. So, what on earth is an ETF? The best way to think about it is like a pre-made shopping basket. Instead of wandering around the supermarket trying to pick out every single item one by one, you just grab a basket that's already filled with a great mix of stuff. An ETF does the exact same thing, but with investments. It bundles together tiny little pieces of lots of different companies, all into one simple product that you can buy in a single transaction.
This really lays it all out, doesn't it? On one side, you have investing in a single stock. That's like putting all of your eggs in one basket. If that one company has a bad year, well, you could lose everything. But an ETF, that's the pre-bundled basket. It spreads your investment and your risk across many different companies. It is a much safer way to start out.
And all of this brings us back to one absolutely crucial point. As a new investor, your number one goal is really, really simple. You just need to get a return that's higher than that 3.8% inflation rate. That's it. That's how you make sure your money is actually growing, not shrinking.
All right, so you know what you want to buy, but where do you actually go to buy it? Well, to get your hands on an ETF, you're going to need a share trading platform, which you might also hear called an online broker. Now, when you're looking for a platform, it is so tempting to just hunt for the one with the lowest fees, right? But this piece of advice is golden. Outstanding value is about more than just the price tag. It's about finding a platform that's actually easy to use, that feels secure, and that has the features you need to get started with confidence. And look, getting started is probably way easier than you think. The whole process is usually just 3 simple steps. You open an account online, you verify your ID, which is pretty much the same as opening a new bank account, and then you deposit some funds. And that's it. You're ready to make your first trade. And hey, here's a little tip. Keep an eye out for sign-up offers. Some platforms will give you rewards, maybe 100 or even 120 rewards points just for joining and making a trade. It's a great little bonus that can help cover your first brokerage fee. So, once you've gotten comfortable with ETFs and you've got your feet wet, you can start looking around at other types of investments to keep building out your portfolio. For instance, you could start buying individual shares in companies you really believe in, either here on the ASX or even in the US. You can always make extra contributions to your super, or maybe explore some higher risk things like crypto, or even use funds that are run by professionals. ETFs are the perfect launchpad, but the journey definitely doesn't have to stop there. Okay, I know that was a lot of info, so let's just pause and pull it all together into a really clear, really simple action plan to get you started. Before you invest a single dollar, please do these 2 things. First, jump online and use comparison tools to find the platform that's genuinely the best fit for you. And second, remember, this is just general info. It's always a good idea to consider getting professional financial advice that's tailored specifically to you and your situation. To wrap all this up, I want to leave you with one final powerful idea. I want you to think of your money not as cash, but as seeds, and you have a choice about what to do with them. And that choice is pretty stark when you look at it like this. You can leave your money in a savings account. That's like storing those seeds in a jar. Sure, they feel safe, but they're slowly drying out, losing their potential because of inflation. Or you can invest in something like an ETF. That's like planting those seeds in a rich garden, the market, where they have a real chance to grow into something amazing. So, the last question is for you. When you think about your future, what's it going to be? The safety of the drying jar or the incredible potential of the growing garden? The choice is all yours.